Hello, everyone. Welcome back to the RationalInvestor.com's 10-minute daily brief recap. I tried 10 minutes. Yesterday I went on about 15 minutes. Unfortunately, I didn't have the mayor, and I have to get used to it. The mayor's going on sabbatical here. So I have to try and get a little more discipline. But he is here today. Hi, Alex. How you doing? You want to say hi to the good people?
Yes, sir. I'm pretty good. Yeah, I'm just keeping an eye on the stopwatch here.
Thank you. So he will be blinging me. If you happen to hear that in the background, but it is 10:15, so let's get this done by 10:25, hopefully. So, the conversation of late, of course, is going to stay basically the same until we actually see a change. U.S. dollars made new highs on a weekly basis. We talked about the potential of an empire forming here if we lose these lows. You can clearly see coming out of the gate first thing Monday morning, they ratcheted the market up. Yesterday was a relatively up day as well. And here we are Wednesday. Today, another up day on the US dollar index. So that empire is nowhere near forming. So what's actually driving the market? Is it US data that's driving the market, or is it international data? And it was interesting through the daily brief today. We took a really good look at some of the econs coming out overnight, and this just looks like an absolute train wreck. Germany, of course, I've made the argument all along. They are one of the most vulnerable countries right now. Being in Europe, we have Jamie comes on the daily briefs and does a nice little fundamental summary of the econs. And we've been watching Germany's, manufacturing indexes, PMIs, all that kind of stuff, just slowly deteriorating. It was just a question of when they were going to break. In the daily brief today, I talked lots about how we're not seeing nearly as many German cars being sold here in North America, even in Canada for that matter. And the news coming out overnight was that economic conditions in Germany are absolutely falling apart. So this could get a bit dangerous here for Europe because Germany technically is sort of the engine of Europe. And if anything, we're going to get back into sort of that race to the bottom kind of conversation. Interesting, though, to see the one winner out of all of this trade war fight with the Americans and the Chinese, and then, of course, what's going on in Europe, seems to be Japan. So we could actually make an argument that Japan and the strength in the Japanese currency actually is being underlaid by solid fundamentals. On the flip side, though, when we look at the econs coming out of China, again, along with Germany, these econs are starting to look very dangerous. So you can see the big one that people watch, of course, is things like industrial production year over year. And you can see they missed by like a full percentage point, and they're starting to say that these are numbers that are reminiscent of like 20 years ago. So big trouble brewing internally in China. And then also too, and it's a bit scary, but we have to understand that the situation in Hong Kong is not getting better, it's getting worse. And now there's talk that the Chinese are actually massing troops near the border to actually do a full-on invasion. And so this could get really bloody, this could get really nasty, and of course you can't have a bull market in stock markets and risk assets in the face of this. So just be warned, people, the writing is on the walls. One thing, though, that kind of bothers me a little bit this morning, once again, the talking heads in the media have convinced themselves that the yield curve has inverted. And just for the record, anybody watching this, I'm a huge fan of John Murphy. I've watched John Murphy forever, and his tool on his site says that the yield curve has not inverted yet. We need to see the 30-year dip below the 2-year for that curve to be inverted. And I think the talking heads in the media are trying to front run this, trying to say, hey, I was the first one who called the top. They're continuing to get it wrong, and that kind of bugs me a little bit. But nonetheless, you're going to be hearing lots of talk about inversion from the media, but as you can see from Mr. Murphy's study here, we are not inverted yet. So just be patient. Yes, we're very near the end of this economic cycle, but I don't think we're actually there yet. Just wait for it. Now back to our story, because obviously I got off on a tangent there. But looking at the euro itself and those horrible econs coming out of Germany, I actually feel very confident that the euro will trade back down below 110 here over the coming months. You could even hunt bot short setups here. I see one high, I see two highs. 25 level probably is in this area right in here. So those people that are interested in trading currencies, I actually like the idea of being short euros here. On the flip side, like we talked about just a moment ago, the econs coming out of Japan are actually relatively okay. So not a big surprise to see the Japanese currencies doing well in the face of, is the US overdone it, whatever, yada yada. But all of our fear asset proxies are all catching a bid here this morning. I've even included silver here in this study here just to show that, this is sort of a flight out of risk, things like the stock market. And, we won't look at the stock market in particular today, but stock market's getting punched in the nose here this morning. Big down day. And that risk off trade heading into all the assets that are supposed to be sort of flight to quality, flight to safety, they're all getting bid up here. Moving on. I think we talked lots about stocks recently, and also that commentary I just said a moment ago. I think on balance we covered the stock market, so we'll pop on over to crypto here for the next 5 minutes or so. And let's talk Bitcoin. What I thought was really kind of cool this morning, of course, and I think I showed this to you guys, but we're running the little algo here on the site, and I absolutely love my little algo. It's producing such cool signals. This was the last bull signal that happened through our TRI meetup, and all the TRIers were just tickled pink at this. And then promptly, once TRI meetup was done, the market politely rolled over, M'd out several times. We had talked about potential bullish bot continuation patterns, or Mountain Man coming in and stopping the bull, and clearly Mountain Man stopped the bull, and we just never did get 3 higher lows and a breakout to justify bot longs. At the same time that we M'd out here, and you could argue this is a 1, 2, 3, 4, 5, 6. What's a 6? I don't even know what that is. Sextuple or something like that. Top. We issued, and this is so cool how the algo issued uber bear signal right on this little doji candle right here. So that meant that you could actually hunt short setups on any kind of market structure failure following this little doji candle. See how that doji candle came in right here, and sure enough, big dump, right? I've drawn this 2-to-1 off of this massive M, but you could also make the argument, and Sharpsters on the site, you could make the argument that you could have traded this M, and if that's the case, if you traded that M, then that 2-to-1 risk reward, and just risking against the original M top here, that 2-to-1 actually was hit last night. Boom. For the purposes of this study, and this is basically what I've been following, I do like the idea of hunting this massive M. Whether you risk to new highs or not, that's up to you. But the 2-to-1 on that trade in particular just so happens to be right down in that area there. And you can see how we're just slowly working towards that. In fact, I think I put the stop right against that high. So this M, and justifying the short off of the fail of this level. So the 2-to-1 had it right about, let's call it somewhere in there. Anyway you shake it, whether you took the little one, way to go. Whether you took this bigger one, awesome. Whether you took this even huger one, which paints 78.6 target, the trade's working. In fact, you could make the argument that if you had shorted this M, then we actually had the target hit. It's done. At this point, you want to take at least partial profits at that 2-to-1 level. I like the idea of selling half of the position on the 2-to-1. We can actually put the check mark. Yes, that did work. And then now we're going to follow market structure. So any kind of pullback here will tell us where to move our stop on the remaining portion of that position. There's your Bitcoin update. Shorts look like they kicked ass. And of course, Algo making me so proud. This thing is just kicking butt. I'm so pleased with this. So there you go. What's, I guess, a little bit bothersome right now for the crypto community is names like Ethereum just never got going. And what I'm worried about here now is if we actually start drawing things like bearish AB equals CDs, you can actually see, because we've broken these lows, these AB equals CDs are now alive, and it's actually painting a target window down here. So the target window, of course, is very wide, but in essence it implies that we're either going to test these lows in earnest, and of course if we do things like reload zones, I think that should make sense. If we go like that, and then we go RLZ. All right, so there is 78.6, there is 61.8. Good old Mountain Man stopped the bear slide there. Counter trend rally, nothing really got going in earnest. We dumped to new lows. So now these bigger AB equals CDs, I've actually put two on here. I put one from this high to this low. That's the sort of teal line here, or off-white. And then I've got the yellow one on here. Either way, it looks to me, and I wouldn't be surprised if this actually lines up with an 88.6. Where's 88.6? There you are. Aha! Look at that. Almost right on the nose. So my hunch is, and also too, probably if we do an extension off of here, that probably is things like 1.618. So where's extension? Ah, look at that. So we've got 88.6 off of this entire range, and 1.618, the golden ratio, and an AB equals CD level. My hunch is Ethereum's got a date at least with the sort of 110, 115 area. If all hell breaks loose, we might actually see Ethereum actually break last fall's lows. And that wouldn't surprise me, because keep in mind, I don't even know what the fundamentals are coming out of this space right now. I haven't heard anything from Vitalik lately. If you know of any new product developments or anything in the pipeline, drop a line in the comments below, and we'll start looking into it. But as it stands right now, this thing sure is looking down. Now, we'll finish today off with kind of an interesting story. I don't know how this trade's going to ultimately work, but I was fascinated in that I bought this little W here, and I said I was just going to simply risk to new lows, and this is Doge. And I find it fascinating that the market came right down to those lows and said, no, I'm done. And actually even put in a little W right in here. So, if Bitcoin and the bigger boys are done rallying and they're getting ready to roll over, we might actually see some of these altcoins do a little bit better. And if that's the case, maybe we can pull up our, this is in Bitcoin, right? We can pull up some of our alts. And let's see whether we have any setups to actually justify hunting bottoms in altcoins. We might. That could very easily be the case. And so here's a really interesting idea. You could actually sneak in here off of 26 sats, risk to a break of this low, which is 24, so down to 23 sats. You're going to risk about 10%, 15% on your money. And if this trade works, you might actually get rewarded quite nicely. So there's an idea for you to chew on to finish off our daily offering. All right, hope you enjoyed the presentation. All the best, and bye for now.